Hello, everybody. Welcome to IC Markets Market Commentary. My name is Adam Harris, and I am part of the team at Trade with Precision. Now, the first chart that I want to draw your attention to, I'm looking at Swissy Yen on the monthly. And so I'm really just going to point out here, first of all, that it not only overextended, obviously, on a monthly basis, but on multiple other time frames as well. It's come up against old highs, and it appears to be showing some signs of exhaustion. So what I'm looking for here is to get a swing high formed, which we get the break of the last or the previous candle's low broken, which is usually then going to shift momentum and have price start to head back down towards the prior lows. And I've highlighted this area in the blue box, which is not an uncommon or unrealistic area for price to pull back if in the future it intends to continue trending up. There is also a possibility that it could come down as far as this previous level of resistance, which then became support. It could come back to retest that, and that actually is also very close to, similar to a 618 and a 50 pip into this area. So I'm just exploring both of these areas for potential retracements, and if I then go down to the lower time frame, so let's just have a look at this on the weekly, you can see that it has actually started the swing high process on the weekly, and usually what that would mean is if the monthly wasn't that overextended, my expectation would be that price would pull back into the moving averages over here and then get ready to continue heading higher. However, I do think, but because the monthly is overextended and it has hit a previous high, that there is a strong likelihood that it's actually going to pull back further. And as I said, it's going to pull it back towards these previous lows here around 124, even potentially as far as 117, 118. So if I then go down to the daily, and of course, because there's quite a few markets, we've had a really strong dollar lately, and because there's quite a few markets that have become very overextended, there's a lot of trends that are almost overdue for a bit of a shift or a change in sentiment, even if it's only temporarily for a few weeks. And so I just want to be aware of that. So one of the opportunities that I'm looking at here for Swissy, and I like this, is because, first of all, the daily, we're now looking at the daily time frame, but it's actually this low, most recent low, has broken the previous low. So this is your uptrend here, producing high lows, high highs. You can see we then started to get, it's very important to note here that we started to see some exhaustion showing up in the candlesticks up here. And not only that, but after it pulled back the second last time and it did its last move up, it just really managed to create just a slightly higher high. And this can be seen if we look at the momentum indicators at the bottom. We've got the MACD and the RSI with just default settings. We can see there's this bearish divergence. Okay, so we've got lower highs on the indicators. That's really a confirmation that momentum is dying. Price then came down and broke the previous low. So this uptrend structure is done. It's extinguished. It's expired. Whichever this parrot is dead. It has broken the lows and it's over. So we then attempted to move back higher again and produced a lower high. Okay, so this is what I'm looking for at the moment. This is my temporary opportunity where I'm looking for a very high probability that price is going to be correcting a lot further down, certainly down, perhaps as I said, down towards 126, 127. And I'm going to be looking for price to break below this level. I want a confirmation, and ideally I'd like to see what's called a momentum candle. I want to see it break and close below that level, just confirming that the momentum has shifted completely. Then what I could be doing is looking for any pullbacks back up to test this level potentially, and then looking for shorting opportunities as price continues down towards the low. So I'm just really waiting for that confirmation. I want a lower low, so in other words, we have a lower high. I want a lower low to have that confirmed daily downtrend, but the probabilities of this happening is very, very high. And also, I mean, for intraday purposes, if we just go down to the lower time frames, this would then obviously provide intraday, or for day traders versus swing traders, this would provide multiple opportunities. And you can see actually the distance that the market has to go. And that would provide me with potential targets. And obviously, usually what I'm going to be looking for is, say, a 3-to-1 take profit. But I do like to see markets head down after they've been quite overextended. And of course, it could take several weeks. It could be retracing for 2-3 weeks. And therefore, day traders might actually get some opportunities to take advantage of the move to the downside. So the next chart that I want to have a look at here is cable. So this is GBP against the US dollar, sterling against the US dollar. And my fantastic colleague Tamara was talking about that as well. And so, of course, the market continued a little bit further. It's still overextended. And that is just unfortunately a bit of a waiting game. We're still waiting for price to pull back into these areas. I've highlighted actually this previous level here of support and resistance. You can see where the market has tested the level from both below and above. And really, those areas are quite significant to both the buyers and the sellers. So I'll be looking to see price, how it reacts at this level. And if it takes a very long time to sort of turn around, but it is definitely now starting to put on the brakes. If it does start to pull back, this is an area where I'll be looking for potential opportunities. The momentum is still bearish in terms of this. And so what that means is, or what that implies, is that chances are this trend is likely to continue after it does a pullback. Nothing's guaranteed in life, but this is what it is most likely to do because the momentum is nice and healthy. All right, so I quite like the look of that. And again, going down to the daily time frame as a swing trader, what I wanted to highlight here is that it is very weak. So not only is sterling weak, but the US dollar is quite strong. And so the market is really consolidating. It almost doesn't quite have the strength to even do a daily retracement back up to these highs. But that doesn't mean that it won't. We could just get a boost on some news. For example, we've got some news heading out, throughout the week. We might have FOMC or rate discussion news. And we could see a shift suddenly in sentiment, which triggers and then shifts the momentum and then starts to work its way back up. And that's really what I'm looking for. Right now, it's incredibly dangerous to trade, even for day traders as well. If we go down to those lower time frames, it's just going to be incredibly choppy. It's mostly going to be sideways. You can just see here. And so it doesn't really know where it wants to go at this time. Next up on my list is dollar Swissy. So dollar Swissy has been trending incredibly well. It's just, and I mean, it's really, really going. So there's a bit of Swissy weakness and combined with a bit of dollar strength, and that's just given us a solid boost. These types of conditions are very favorable towards day traders. Okay, on the lower time frames, there's a beautiful, what we refer to as optimal price action structure. Just very nice, steady kind of flow to it. It's starting to become a bit tired. We can see here that the MACD and the RSI are starting to head lower, but price is still creating fresh highs. So it is running out of steam, and it's starting to do smaller cycles. As it starts to come back, it's starting to run out of steam. So at some point we can expect, I think it's fair to say, we can expect price to break these lows and then start heading lower. So again, I have a couple of choices here. And again, one is slightly more high risk. One of the things that I can do is, let's just assume for the moment temporarily that it turns roughly in the area where it is. I just wanted to highlight that the 618 brings us roughly down towards these old highs, close to 9.4. And therefore, there's a possibility that price could very fairly sort of retrace all the way back. It can do that with currencies. They can retrace quite far. They can do deep retracements, and so that's quite a possibility. And so that is one possibility. Is I could do take a similar approach as I have with Swissy yen, and look for a break of the lows and a shift in trend, a lower high, lower low, to take advantage of that. It is also, if we just look at it on the higher time frames, we can see it's very much overextended. You can see where the previous lows and highs were around this area. So it's a good area for it to come back to. 0.94 or 0.93 is a really nice spot for it to pull back to. It's not impossible that it can keep going, but it is very overextended. And in all my years, that is something that ultimately ends with a strong correction. Next up, we have Euro Swissy. So just saying, it would require some patience for this to pull back in towards these areas. And if it does, it is very likely to be a weekly retracement, which means that I would be looking at the weekly chart to give me a guide as to when it has come back into this area and highlight those levels, and then start looking for a change in trend back to the upside. Alternatively, I could be looking for shorting opportunities on the lower time frames as it heads back towards that level. So then on to Euro Swissy. So this to me is again very interesting. Let's go up to the monthly time frame. And what I wanted to just show you here is that we've had this rejection of this, let's call it a floor at parity at 1, several times over. The SNB, the Swiss National Bank, have expressed that they obviously don't like the fact that it keeps heading lower. They've intervened several times, and this happened in 2014 as well. I was actually trading on the morning, and this almost broke the currency market. So this was we know that they're capable of doing something silly and perhaps intervening and not necessarily giving anyone a heads up. But I think that that's proven to be a very bad idea in the past. However, what I wanted to put out here is that we do appear to be getting a bit of a pullback at the moment, a bit of a swing low potentially forming on the monthly. If we then go down, down to the weekly, it has produced a high low. So what I'm looking for here is to see it break above that 1.0335 level, these previous lows and these previous highs, where it's been struggling to get through. There's some exhaustion and failure of those candles there. Looking for it to break through is a nice solid move, which would then free it up to start heading up towards 1.06, for example. And if I then look at it on the daily, what I see here is a series of high lows and some very nice bullish momentum. So both indicators are trending higher. I'm looking really for a solid breakout of that. And what that would do then is potentially provide me with buying opportunities, especially if price comes back to retest this level. But then I would have much more confidence in price moving higher, if at the very least up to 1.06. And so be looking for moves. And again, both on end of day as well as intraday timeframes. Then the last two charts that I wanted to show you, first of all, is Euro GBP. So it's not just about which charts are catching my interest. It's about which charts I would absolutely stay away from. And I just wanted to give you a couple of those examples. So the first one is Euro GBP. It is very much range bound, very much entangled in the moving averages, the 10, 20, and 50 moving averages here. And so the problem with this is that until it gets out of that range, it's not really going to have a strong move in any direction, which makes trading any of those or trying to engage in the market while it does one of those big moves very, very difficult. So this is just an example of something that I would absolutely stay away from. And then also one last discussion is, for example, if I look at the US indices, which are obviously a good guide as to the global indices, what my kind of take on this is at the moment. So at the moment, we've got a daily downtrend. We are sort of starting to slow around these previous levels at, say, 4150. Strong rejections telling us that buyers are still in this area, although we do have a downtrend. It's starting to push up a lot sooner. So we just get fresh lows when we start to push up a lot sooner. If we then go up and have a look at it on a weekly basis, we had some rejections of these previous highs at 4.6, and we're still producing currently a bullish candle at these lows here, again close to, let's call it the 4.1 level. So it does appear as though we could potentially be range bound in this area, which means that the market could attempt to head higher, and this could be the state of affairs until the end of the year. So although it is generally testing the lows, if it does produce a strong bullish candle here, it's very fair. It's a fair assessment to believe that it is. We can see we've got equal highs here, equal lows, that it is range bound, and therefore there's a high probability that it's maybe going to attempt to rebound and go back up. If it produces a lower high, then there's an implication it's going to head even further down. And just to finish that off, to give it context, looking at the monthly, you can see that actually we frequently pull back into the moving averages before we head out. And that's all we've really done here. So if we take a big picture look at it, we've pulled back into these moving averages here. And this, therefore, is a valid area for the market to recover and potentially start heading back up to the highs. But the only way that I'm going to know that with a high degree of confidence is if we get a green bullish monthly candle, which is waiting a couple of weeks out, waiting for that to be the case for the end of the month to get that. And then we get a follow through in the early parts of the next month to see if we get a break high. And that is then likely, the probabilities are high that it's then going to continue. But what I did want to say is that we are in a very standard location for price to potentially find a floor and turn around. And we're still kind of hovering within the highs and the lows of the last 3 months. This is on the S&P 500. So just highlighting that, giving it some context that isn't always necessarily apparent on the daily. So I'm going to leave you with that. I want to wish you a fantastic week, and I look forward to talking to you in future videos. Thank you.
Thank you.